and so on. So that's why I'm up here. So it's great to meet you.
As well. Appreciate it. Don't want Dave in now. Don't want Dave coming in.
Text him. Text me.
All right, well, 2 more minutes and then we'll kick this off.
Perfect.
Okay, shall we kick it off?
Go right ahead.
Okay, I want to thank everybody for joining us today. My name is Greg Reyes, and I am hosting this Spaces because some of the folks that follow me are probably tuned into the fact that I've got a very different opinion about what is happening in the AI space, and having managed a highly successful infrastructure company up to, through, and out of the dot-com bubble, I really believe that what we have happening here is a mega trend that is in the very, very early innings. And, I'm a student of the AI ecosystem. I think about the ecosystem as having a number of elements that go well beyond GPUs. And I think that there's some analogs in terms of how this technology cycle will unfold with other ecosystem players emerging to the forefront in terms of being impactful opportunities for those that are interested in investing. But I think it's different this time than it was during the dot-com phenomenon, where 40 to 50% of the dot-com spend was associated with one-time events like Euro conversion, Y2K, telco deregulation. And then we had a lot of companies that were started that were valued on eyeballs and clicks. And Mary Meeker from Morgan Stanley tried to find a way to value these companies. And when the dust settled, many of them went out of business, but many emerged as industry giants. from Google to Amazon to Cisco. And I think what we have happening here is a realization that AI isn't just an arms race between the US and China. It's an arms race at the enterprise level, it's an arms race at the sovereign level, and that AI technology is going to be deployed to help businesses make more money and save money, which wasn't always the case during the dot-com phenomenon. So one of the areas that I've been very interested in personally is the area of data center cooling. Many of you have seen my posts about long duration energy storage and EOS energy and how they fit into this lexicon. But one of the emerging areas that I think is going to have a huge dollar spend is in the area of data center cooling. Why? Because back in my day, when you'd go in a data center, it sounded like you were in a jet engine and they would blow cold air over the CPUs to cool them. And then we saw something called one-phase cooling, which was basically running cold water across these GPUs or CPUs to cool them, which is very expensive and isn't particularly efficient. And now we're at a point where these GPUs are running so hot that new technologies are required. So why is Roland here, and who is Roland? Just by way of background, Roland is the Chief Growth Officer and Executive Committee member at a company called Innventure. And I think Roth Capital, in a note that they put out recently, does a great job of describing who Innventure is. And I'm going to read from their note. The analyst says that Innventure is a technology incubator focused on creating and rapidly scaling companies that leverage breakthrough technologies developed/studied by large multinational corporations, blending aspects of venture capital with private equity. And that really resonated with me personally, because back in the early days of my career, and this is really going to date myself, there was a company called Xerox. And Xerox had a research group out in the Bay Area in Palo Alto called Xerox PARC. And Xerox invented the mouse. And they invented the graphical user interface, and they invented other technologies that they were never able to commercialize. So the Innventure team is the team that found the technology that ultimately resulted in the creation of PureCycle as an industry leader in the recycling space. And Innventure is a publicly traded incubator that invests in technology companies that have the opportunity to provide outsized venture capital gains to investors and allow investors to participate in companies that have yet to go public. So with that, I'm going to turn it over to you, Roland, to talk a little bit about Innventure and then talk about one of your cornerstone companies in the AI cooling space called Accelsius, which had a big press release today. So, Roland?
Well, thank you very much, Greg. That was a very nice introduction of the business. And I appreciate the opportunity to speak to everybody here. As Greg mentioned, our business is in creating companies around transformative technologies that we source from major multinational corporations. And I'm just going to make one correction to what you said earlier, Greg. We don't invest in other people's businesses. We start our businesses from the ground up. So we are the owners and operators of the businesses that we create. And our model is that there is a tremendous amount of corporate R&D that is missing a path to commercialization. And you're correct, the first company we did that with was PureCycle. But what we are looking to do is find transformative technologies that major multinationals have invented because they need the solution themselves but couldn't find it in the marketplace. So when we find those situations where you have a significant unmet market need and you have a major multinational that has developed the technology beyond a proof of concept with market data that they have, which most entrepreneurs can't have. That's the one advantage of working with multinational corporations, is they have extensive data simply because of the depth of their sales forces. And when we have that, we will launch a business if we think we can grow that business within a reasonable period of time to be a multi-billion-dollar business. And with that partner or multinational as someone that's going to help catalyze adoption in the industry, either as a channel to the market, as an early customer, or as in an ideal situation as the first customer. So really what we're looking to do is mitigate a lot of the risks in early company creation, identify a major unmet market need, vet the technology solution, importantly, identify whether there's a quantifiable value proposition that's going to compel adoption of that technology, and then have a channel to the market with the source company of the technology. So the first company, as you mentioned, Greg, we did that with was PureCycle Technology, and we took that company public at about a $1.2 billion valuation in 2021. We have launched 4 companies to date, but the third company, Accelsius, which is involved in data center cooling, is of course, as you mentioned, at an interesting juncture where we anticipate being able to create significant value. Just for context, in the case of I'll do the total spend since history. Since we started the company, we've spent about $160 million off of our balance sheet to create the companies we've created. And we've created about $860 million in realized and unrealized value, and $469 million of that was already realized and distributed out in the form of the distribution of PureCycle shares. And we believe that we're at the tipping point of doing that again with Accelsius, which we can get into as we progress the conversation.
Well, that's great background, Roland. Maybe to frame and tee up the conversation about Accelsius and its role in this explosive data center cooling market opportunity. Let me just spend a minute opining about how I think about markets and what I look for personally in terms of company attributes, which is what got me involved in and excited about Accelsius and led me to learn about Innventure. So, I always start from the top down. I look for markets that have a large TAM. I look for companies that have novel technology. I use the term physics changing, although it's not a form, fit, and function facsimile of changing physics, because you can't change physics, but basically doing things differently that bring a new level of utility to the customer. And in this case, data center cooling is a huge issue. It takes up rack space. It consumes a significant amount of energy. And we've got GPUs running hotter and hotter and hotter. And there's also a technology dislocation from single phase to two phase to ultimately to chip to die. So the technology is an important element. The team is also an incredibly important element. Do you have people that have the pedigree to turn the technology into a viable business? And then ultimately, is the business model something that can scale? So, with that, Roland, I'd like to turn it over to you to just talk about the Accelsius opportunity and how you and your colleagues think about it, and what the potential market opportunity is, and the technology opportunity and the team, and ultimately what this business could look like in the future.
Sure, Greg. I'll definitely do that. Accelsius is a unique story. As I said earlier, we look for opportunities where there's a compelling economic value proposition that's going to compel adoption by the market. In the case of data center cooling, it's not just that there's a tremendous economic benefit from direct-to-chip two-phase cooling. There's an absolute need. So it's not only is there an economic value proposition, there's a critical need today because of the direction of chip technology. And that's what makes this one Accelsius such a unique opportunity for us. It's not just economically driven, it's driven by the fact that there is no technology out there that can cool the next generation of chips. If you look at air, you're typically 200 to 400 watts per socket. If you're looking at water, you're 500 to 1,000. Some of our competitors in two-phase have announced 2,800 watts. we've announced 4,500 watts. So there's a real need for the next generation chips, and so that's why we were so excited about the opportunity. But you're right in what you said earlier. It's not just the opportunity; it's the ability to realize the opportunity by putting in together a world-class team, and that's what we've done at Accelsius. We're over 80 employees at Accelsius now, and this is a company that we just created a little over 3 years ago. And it's an absolute stunning team with some of the top experts in thermodynamics. So you have a company that's led by Josh Clayman, who had a long career at Dell and understands that more than having a good technology, you have to build a good company, and you have to be able to deliver to the market. You have to deal with supply chain. You have to deal with how you design your technology to fit within the existing protocols of the industry, so you're not making your customer change what they do. The size of the need, of course, is immense. We all know what the data center spends are. I think next year, data center infrastructure spend is estimated to be somewhere in the area of almost 500 to 600 billion. Hyperscaler spending alone is going to be about 370 billion. Cooling market, I've heard various numbers of where we are, but we're certainly in the low to early, 20 billion-ish size that is expected to grow upwards of 100 billion. Liquid cooling is nascent. It's about 5 billion, and almost all of that is single phase water, which the industry has quickly realized will not be able to meet the demands of high performance compute data centers. And so this is a very unique opportunity with a very strong team. And not only do we have an outstanding technology, there's a go-to-market strategy, that is very much on track, and with no concerns about supply chain. Dual source supply, almost all of it's North American, and that's a problem often in innovation. Companies can have good technologies, and the industry says, "Great, I want 1,000 units," and the customer says, "Well, I can only make you 10." So you have to fit yourself to be able to get to the market and supply the market.
So Roland, one of the things that jumped out at me in terms of the value proposition of Accelsius that went beyond the core technology having better thermal cooling characteristics than the competition by an order of magnitude is the fact that it frees up 75% of the customer's available rack space, which, based on my prior history, is something of incredible importance and incredible value to the customer, because it means that they can deploy more infrastructure. Deploying more infrastructure equates to generating more revenue and the associated density. Can you talk a little bit about the architecture and how you think about that value proposition to the customer and the differentiation as it relates to the direct cold plate application that sits on top of the processors, and how Accelsius delivers that value?
Sure, Greg. I mean, in simplest terms, you're right in what you say. You free up more real estate to populate your data center with racks, because you don't need aisles that are widely spaced apart, and you don't need the heat sinks within the racks themselves. So you can densify the racks, and you can put more racks or aisles in a data center. So just in that element alone, you're densifying a data center significantly. In addition, right now, because air is inefficient, and the best example I can give of that is put your hand above a frying pan and touch a frying pan, and you'll notice that air is not a very good medium with which to dissipate heat. But you have a huge energy bill to cool a data center. Well, you can reduce that energy spend by about 30%, or put differently, you can repurpose that energy to do more compute. So you can densify the data center, and you can take the energy that was used to cool with air and use that to process more data. So when I first heard about the technology, my initial thought is, I want to go out and buy data centers, because much like a real estate developer, I can make the real estate more attractive. But that's really, that's what I talk about, or what I mean when I talk about the economic value proposition. There's a tremendous economic incentive because you can densify a data center and repurpose the power that's going to cooling to process more power. But as I said earlier, it's more than that in the case of data center cooling. This is a critically needed a solution because of the direction of chip technology. You mentioned at the outset, Greg, how you were involved in infrastructure. In my opinion, this is critical infrastructure for data center and AI. This is like picks and shovels to the gold mine, and this is, as you said, this is not a. It's not like the earlier software story. This is an industry 4.0. This is a tool that creates tremendous productivity and will for many, many years.
So thank you for explaining that, Roland. The other thing that really struck me, and again, I'm a personal investor. I'm not a financial advisor or somebody that gives financial advice. I just share my opinions and opine about companies and technologies. But one of the things that really struck me is that being an old warhorse that has gone through multiple technology cycles throughout my career, you'll see a lot of companies that have a great PowerPoint presentation. They'll have a prototype that they can show in the lab, but there's a big chasm to go from that to signing up customers and ultimately producing in scale. And one of the things that excited me about Accelsius was the involvement of Johnson Controls. I think they're known as a pretty buttoned up organization, and they made a small investment in the last round. And I also noticed that Johnson Controls had a slide on Accelsius in their most recent earnings presentation. And today, I saw a press release hit that says that DarkNX has entered into an agreement to deploy 300 megawatts of the NeoCool product, which is the two-phase cooling solution. And from an investment standpoint, it appears to me that we're well beyond the proof of concept phase, that we're right at the beginning of the deployment phase. Can you share something with the people listening in terms of how they should be thinking about that, or at least how you think about it?
Sure, Greg. I mean, I think I'll come down to the Accelsius level, but I'll just make some overarching comments about transformative technology to begin with. Anytime you have transformative technology, it's very different than a mature technology where sales are predictable on an annual basis, because you have to adopt a new technology. So there are a lot of things that most people just don't see as apparent. You simply think, well, if it's a great technology, it's going to be adopted. But large companies are focused on other things. The customers, they're focused on supply chain. Is there a supply chain? Do you have quality assurance? And whatnot. And so it takes time to get there. And, and if we look back at the last year and 2025 to date, we certainly saw progress in the sense that we were starting to get into the market. Accelsius was starting to sell into the market, but not significant volumes. There are more proof of concept sales. But in the background, a lot was going on. I mean, there's an old saying that I've always said before, or there's an old saying that I've adopted. The old saying is transformation happens slowly then suddenly, and I prefer to say it's the awareness of transformation that happens slowly then suddenly. The internal buzz and the amount of activity that's happened within Accelsius and Innventure has been enormous, and people that have gone to any of the conferences like OCP have certainly noticed that the booths of Accelsius were amongst the busiest at any of the conferences, and there's third-party reports of conferences that talk to that. But what you're seeing, coming to the point that you said, is the industry is coalescing around this solution, two-phase cooling, direct-to-chip two-phase cooling, as the standard. And it's not just the investment by Johnson Control in Accelsius, it's other things you've seen peripherally that show that this is an industry trend. You saw that Eaton acquired Boyd at, I think it was roughly 9 times revenue or 22 times earnings, and again, you saw Dicon acquiring Childyne. So you're definitely seeing that the industry is finally starting to wake up to this. They're getting more comfortable, that the players are lining up. And if you look at today's release as an example, this is the largest two-phase direct-to-chip deployment to date. This is a 300 megawatt data center campus that's being built in Ontario by DarkNX, and they simply saw this as the most efficient cooling technology because it integrates so well with the efficient chillers that Johnson Control provides. It allows the facility to have higher water temperatures because of the combination of the cooling technology of Accelsius and then the chillers of Johnson Control. So I would say that that's a good first proof point of the value of that relationship. And those are the types of things that you need to see to unlock and make the industry comfortable. One other thing that not from today's news release, but on our earnings release earlier this week, we talked about the pipeline coverage at Accelsius. And and it's significant. Our pipeline coverage is now over $1 billion. We saw about a 79% increase in opportunities in the third quarter, and what that really meant is we had more opportunities in that quarter than every quarter to date. Now, we're not projecting revenue because when you have transformer technologies, again, as I said, it's different than standard industrial tech, where you can say you can sort of say pipeline coverage has certain ratios relative to what your realized sales are going to be. It's harder to see in transformer tech because the timing's harder to see. But what I'll say is this: in any industry, $1 billion of pipeline coverage is significant, and the coverage is now about 75 to 80% production orders, not proof of concept orders. So we've migrated from proof of concept to production, and we're seeing a spike in pipeline coverage at the same time. So as I said, I don't want to go and talk too much about pro formas going forward, but if you look at standard manufacturing or industrial pipeline coverages, typically your raw coverage will be about 2.5 times of what you realize. In transformative tech, it's a lot wider. It's harder to say what it's going to be, but suffice it to say, that's a very significant pipeline coverage for any business going into a new year.
So, Roland, if you were to summarize I'll take a shot at it. So we've got a novel technology that has a step function in terms of data center cooling performance as compared to what was viewed as being best in class. It's a technology that frees up 75% of the rack space density from current technologies. It provides better thermal dynamics. It uses less energy. It reduces emissions. And we've now moved beyond the proof of concept phase to the deployment phase. I know you can't talk about numbers or, what the revenue ramp might look like, but suffice it to say, when you put all of that together, the atmospherics for the company appear to be a tailwind. The market dynamics appear to be a tailwind. The economics to the customer appear to be compelling. And 2026 should be a good year for Accelsius, current course and speed.
I would say that we're optimistic that we will have a strong Q4 in 26. Yes, that would be a fair statement, Greg. I mean, again, we don't make projections. We just point to the fact of what we do in our model, how we create companies, how we build companies. Our goal is to create long-term value for our shareholders. Much like, if you look at other strong operating conglomerates out there, Ropers, Danahars, Constellations, that's what they do. It's very different than private equity that invests to, look for shorter term returns and exit timeframes. When you're the owners and operators of the businesses you create, you're doing that to create shareholder value over the long term. The industry size here, as we've talked about, is huge. So.
Got it. So for people that are interested in this space, obviously Accelsius is not a public company yet, but Innventure owns a significant percentage of Accelsius. Is it safe to say that if somebody were to buy Innventure, it would be a way of owning a piece of Accelsius before the company was to go public or get purchased at some point in the future? Is that the right way to think about it?
Oh, 100%. Because yes, we are majority. We control the vote of the company, so we consolidate the financials of the business. So yes, we're a very large controlling shareholder. Now, having said that, I'll make a point here. We don't micromanage the businesses that we create. We create those businesses, we grow them, but they're self-running businesses with their own management teams. So we don't have we operate on very much a decentralized model. But the fact of the matter is we consolidate the financials, so it's kind of a flow through for in most parts. The success of Accelsius should be mirrored in Innventure. And we don't have a lot of companies. We have a few companies. It's like we put our eggs in a few baskets and we make sure we're successful with them. Again, unlike private equity, which tends to play more of a numbers game or a spread betting game, we aim for high probabilities of success, so we have only a few companies at a time. And our goal is that the value creation of those companies is reflected in our stock price. Got it.
All right. Well, I think that before we open it up to questions, suffice it to say there are other companies in the Innventure portfolio that investors would be able to indirectly participate in by owning Innventure. Is that the right way to be thinking about it?
Yes, there's two stories to Innventure, as I've tended to tell investors for a while. One is the near-term story, and certainly the near-term story is the Accelsius growth story. The long-term story is we've created 4 companies, one of which we've already realized tremendous value from. The third one that we think we're at the tipping point of a similar value creation. But in the long term, we didn't go public to be a small cap on NASDAQ. We went public to be a large cap industrial conglomerate whose financials we consolidate. So yes, there are other companies in there today. As you know, we have a sustainable packaging business, and we have a company that we recently launched, Refinity, that we collaborated with Dow, and that takes mixed plastic waste and basically can take that back to the original feedstock that petrochemical companies like BASF, LyondellBasell, and Dow can use to create their products, including polymers. So,
Got it.
Yeah.
Got it. All right. Well, unless there's anything else that you'd like to add, Roland, maybe we should just open it up to questions. And Bryn, maybe you can start with the first question and then invite other folks up.
Sure. Just first of all, congratulations on the last quarter. Great results and progress, and thanks for giving us a quick summary. Really great summary. I gained a lot of new points from it. I am curious. My background is heavily in manufacturing, and so I am curious to understand a little bit more about how you think about the ramp up of the manufacturing process. Is it heavily automated? Is it quite a manual process? And is the supply chain in North America, are you affected by tariffs and that sort of thing? So maybe you could kind of go around the horn on that one.
Sure, a little bit on that. Everybody's affected by tariffs to some degree, but no, we are most of the componentry is North American sourced and dual sourced. So I would say we have, again, everybody's impacted to some degree, but that I think is a minimal concern for our business. In terms of manufacturing, you're right in what you say. I mean, as I said earlier, you have to be able to supply the industry. If you look at the hyperscalers, it's possible that they can come to you and say, we want 1,000 racks per week. So very hard for a small company to do that. So you have to build your supply chain in order to be able to do that. And again, I'm only talking about public information on this, so I'm not going to say anything specific. Suffice it to say that we have a very well thought out model where we can supply the market to a meaningful degree from our in-house production, but we've established contract manufacturing relationships with the industry where we can scale very quickly to the customer. And in fact, that's also valuable because when you establish those relationships, you can co-market with the contract manufacturer to the end customer. And the end customer is going to want to see that quality assurance from the contract manufacturer. So, I mean, it didn't answer your question specifically, other than I'm trying to give you comfort that we have a very strong internal manufacturing capacity, but we've substantially bolstered that with contract relationships.
And do you see this as quite an automated process of manufacturing, or is there quite a heavy labor component?
I can't answer that question directly, unfortunately, because you're talking to the capital markets guy, not the technical team or manufacturing team.
Sure.
But there is, there are technical components to what Accelsius does, that do require expertise in thermodynamics. I mean, if you're looking at like our technology or our cold plate technology, it's not just a simple cold plate. It's a complex cold plate with microchannels that induce nucleation of the fluid to a vapor. So there is, certainly hardware IP that you have to be able to manufacture and protect.
Sure. There's actually some great YouTube videos that I found very helpful that Accelsius put out there. So for anybody who's on the space interested in listening to those. So anyway, let's invite anybody who's interested to raise your hand and come up on stage. Steve?
Hey, thank you very much, Roland. This is great. I have a couple of questions for you. The first one is, what type of intellectual or property protection does Accelsius have? And are there any alternative technologies out there that may pose a threat to the company longer term?
Good question. Again, I can't speak specifically to the patent protection other than to say we would not launch a business unless we felt we had a strong patent portfolio. So yes, we have a strong patent portfolio that we initially acquired, and we have built on that substantially. But there's no doubt there's going to be other entrants into the market. Right now, this is really more of a duopoly. There really aren't a lot of suppliers in the market. There are a couple of suppliers of this technology in the market, and that's part of the problem for why you haven't seen mass adoption yet, is the industry needs to see that there's an industry that can supply it, not just one or two players. So there will be innovation in the industry, but we have a very, very strong patent portfolio and a very strong R&D team. I mean, I'm just going to ask you to go to the second part of your question, though, because I sort of missed you there. So if you could just go to the second part of your question.
The second part is alternative products that may be available around the corner that could pose a threat to Accelsius.
Well, it's not so much around the corner. There are competing technologies. Single phase water still, argues that they can innovate themselves reduce the leaks, increase the thermodynamic potential. I don't know if that's valid or not. I would say it's not, simply from a physics standpoint. And there are even differences in two-phase. I mean, you have pool boiling, you have flow boiling. You know, pool boiling is where the water just sits there stagnantly and boils. And I wouldn't call that as competitive as flow boiling, which is what Accelsius does. We heard earlier, of course, the Microsoft announcement of direct to die. And we have a white paper that's out there on that. It's something that we're already looking at, because whether it's a chip or direct to die, you still need that thermodynamic back end, that ability to put fluid through in order to cool. So you know, but the one thing that I would say that the biggest one that the market, I would say, is confused about when they hear liquid cooling is they often confuse direct-to-chip cooling with immersion cooling. So that's another technology that's out there, but that really isn't, in our view, you have to change the whole architecture of a data center for that. But really right now, there are really only a couple of global players here. There's Accelsius, there's Zutacore, there's Boyd, and so those are really the ones that are at the forefront. I think when you look at competing technologies, the important thing to note now is that the industry itself, you know, companies like Johnson Control, are coming to our solution and basically validating it as the, you know, incumbent technology going forward.
Okay, that's very helpful. And if I can just ask a second question, oftentimes when you have structures like this, you could end up with a value trap. And I think back to when Yahoo had a huge position in Alibaba and it traded a significant discount. I understand in the past that you did spin out the shares, correct me if I'm wrong, of PureCycle. Going forward, is it the intention of the company to operate with that sort of distribution model in mind?
The original model of Innventure when it started with PureCycle was more of a let's build, monetize, and do it again. The flaw in that model is you're often forced to sell your companies early, and you also the only way you get a rate of return to your investors is by distributing gains or companies out. And we did a thorough analysis, and we felt that when we looked at some other models, specifically the industrial conglomerate model, or conglomerate model, I would say the modern conglomerate model. Again, I'm talking about companies that cover a wide variety of industries like Constellation, Roper, even Brookfield, Berkshire, Danaher. They tend not to their assets do not tend to be trapped. If you can demonstrate high compound earnings per share growth, you will get a premium multiple in the marketplace. So, but there are a couple of reasons why you would take a company public, and one of them is that you're not getting the recognition of its value. And so to get its value, you take it public in order to maximize your shareholders' value. That doesn't mean you're selling your business. That just means you're taking it public. The other reason why you might take a company public is because their own M&A growth strategy may be advantageous if they have their own public currency. But the Innventure model today is one where we can successfully launch businesses that are transformative businesses that all have these S-curves of growth. And if you can launch one every few years and compound the earnings of those businesses, you can get that kind of high compound earnings growth, which will get you reward you with a premium valuation in the marketplace.
Okay, great. Thank you very much.
You're welcome.
If there's other people who'd like to jump in with questions, please raise your hand. I believe it's at the bottom of the let me see where it is. They moved some stuff around since the last space, but I believe it's on the bottom of your screen, and then there's unmute as well. So please raise your hand if you'd like to join as a speaker.
Man, this is a shy group. No other questions. Well, I have a question for you, Roland. As you think about Accelsius going forward and the Johnson Control relationship, you'd mentioned the Eaton purchase. And I don't believe that anything has been publicly stated about Johnson Control being an OEM. Clearly, in this announcement today, the implication is that the Accelsius product works well with Johnson Controls, and that this announcement with DarkNX, basically has a synergy with that. Do you envision the primary path to market being companies like Johnson Controls, or do you envision the traditional data center CPU providers reselling this technology on an OEM model? How should people think about the go-to-market?
Well, I think you're going to see a number of ways in which Accelsius goes to the market, Greg. I mean, earlier in the year, we announced that we had signed a 3-year a white label agreement. We didn't announce who it's with for, obviously competitive reasons in the market to the customer. But I think you're going to see companies that don't have access to this technology could conceivably want to enter into the market by white labeling. You'll have other companies that might want to co-label, and you will have some direct sales. So you're going to have a number of ways in which to penetrate the market. But the real way we feel that you have the best ability to maximize your growth is to focus on the customers that aren't just doing small orders, but are the ones that can have leveraged orders. You go proof of concept to production to really large production. So you want to focus on the types of customers that can make significant orders.
Well, I would say 1,000 racks a week is a pretty significant order.
Yeah, that would be very significant. 1,000 racks by itself would be a significant order, Greg.
Yeah.
So yeah. But it tells you the size of the industry and the size of the opportunity. And as I said at the earlier in the call, I mean, my view is always that transformation and the adoption of transformative technologies. It doesn't happen suddenly. There's a path to adoption, and so it shows that it appears slow and then sudden. But I have to think that if you look at the industry news releases that we mentioned of some of the other acquisitions, if you look at JCI's investment in Accelsius, if you look at our order book, our belief, our management belief, is that the when for Accelsius is now. And it's the when for the industry, and it's also by definition the when for Accelsius, and that's our belief, and that's what we hope to be able to demonstrate as we move into Q4 and 26.
Thank you, Roland.
Anytime.
Complex Kenny also joined the stage. Did you have a question?
Yes. First of all, Greg, thank you for putting this together and all the work you've done over the years. And for this, I was just wondering if you could address future dilution risk and how you raise capital as things progress, and what's your outlook for that type of situation possibly?
Yeah, I mean that's a good question. I mean, anytime that's a risk that any early stage company that has a gap between expenses and revenue has to deal with. You have to finance that growth, and you have to minimize the dilution risk. So again, I can't talk about forward-looking statements because we're a public company, so I can only talk in generic terms. But what you don't want to do is anytime you're always looking at what's the cost of your equity versus what's the cost of debt, and you have to explore those alternatives. But there are solutions that are always available in the marketplace, particularly when you start putting points on the board. And this was a calculated decision we made prior to going public. You know, we could have stayed as a private company for longer at the Innventure level, but our strategy was always to be a public conglomerate that can live off the cash flows of our businesses and become self-funding for the companies we create. So there's a little push and pull in terms of the timing of when you do things, but we recognized that we had a significant growth engine in Accelsius, and dilution does not become a problem as the market starts to become aware of the story. Obviously, if your stock is up, you can raise money at higher prices, but even when you're doing well, the debt providers tend to look at you much more favorably. So cost of capital is really related to results, and if we deliver the results, we don't think we're going to have dilution risk in the business.
Maybe it's also worth to mention, to the extent that you can, the recent raises that you have conducted.
Sure. Obviously at the Accelsius level, Johnson Control made an investment. We did not talk about the valuation of that transaction. So I really can't address dilution there. Again, suffice it to say that we believe that we have created significant value in the business that we're very happy with. At the Innventure level, we raised about $25 million, $10 million through a pipe offering that was just under $10 million at $6, so a little bit above where we are now. And then we took some convertible debt down as well, about $15 million. So, and we're not, again, without saying anything that I can't say, I can simply say that, we're not in a position today where we have to raise any additional capital.
Thanks for that. Eric?
Yeah, thanks, Greg. Two questions for me, and appreciate you guys taking the time. The first one, both relate to Accelsius. The first one was, you alluded to immersion versus air and obviously liquid cooling, and it requiring a different data center architecture outright. So it's kind of a two-part question. The first one is, would you agree that naturally insulates, Accelsius a little bit more? And two, are there any other examples like that or characteristics like that where, even though some people may argue that immersion could be more cutting edge and the next wave, and others will obviously disagree. I think people in the Bitcoin mining community tend to prefer that, and it comes with its own challenges, like not being able to repair things and all of that. But are there any other characteristics of Accelsius technology or the alternatives that create more insulation from a defensive standpoint? And then I'll move on to the second one.
Sure. Well, first I'll say it's not that it's an either or. There are use cases for immersion cooling. So I absolutely agree that there will be use cases for that. It's not that there's going to be one solution only in the market. But when you look at, without going into immersion, there's clearly a ramp when you go from air to single-phase water to two-phase. And even within two-phase, when you go from pool boiling to flow boiling, you get incremental advantages. So there will be other players in the market. One of our advantages is that we're first to market and we're an industry leader now. But again, like every company, you have to stay ahead of the curve by investing in R&D. But we feel we have a very strong moat in the marketplace at present because we think we're at the front edge of heat capacity, at 4,500 watts per socket.
Got it. Thank you. Second question is around the Johnson Controls investment. So I understand you can't share certain things and won't share valuation. I was wondering if you were able to share whether there's any kind of call right or other type of takeout right that could cap current investors' returns that Johnson has.
Well, we wouldn't do a transaction where we put a ceiling on what we could do for any of our companies. So no, there's nothing like that. That would be a bad trade if you put a cap on how much you can make from the companies you create.
I agree. Glad to hear it. Thank you.
Peter, I think you did not get a chance to ask a question yet.
Yeah, hey, good evening, guys. Can you hear me okay?
Yes.
Yeah, just, hey, thanks to Greg for hosting this very informative and fascinating call. Roland, I want to ask, as I've been making my way through your site, it really is pretty informative, so thanks for keeping that updated there. Your new cool line of units there, are you guys, is it flexible enough where you're able to install this technology in, let's say, a data center that's 3-5 years old, or you guys cater to more of the new builds that are going on now?
No, you can retrofit to existing data centers. If a data center has already made the investment to go to liquid, even single phase water, they've already done the infrastructure work to accommodate Accelsius technology. So you can basically go right in there. So yes, you can go into existing data centers, but you bring up another point that I didn't hit on earlier. I mean, and also on the previous question, when I talk about designing to fit into a data center, not changing the infrastructure, one of the things that's important to note about Accelsius's products is they were designed where every component is completely hot swappable, so you don't have to turn anything down. If a pump fails, you just simply take it out, swap it in with another one. If the intelligent control unit fails, it'll still operate and you can replace it. Everything is designed to be hot swappable in the data center, so it's very easy to integrate it with the existing protocols of how data centers are managed without having to bring in people with specialized skill sets in order to manage the technology solution.
Excellent, wonderful. Thank you so much.
Any other questions? Okay. Excuse me. Why don't we
Greg?
wrap it up?
Greg?
Yes,
It's Steve. I just have one more question for Roland. I don't know if he could answer this, but can you give us any color in terms of the cash burn for Innventure, separate from the underlying portfolio companies? I'm just trying to get a sense of if no cash flows are returned from the underlying business, how long it's going to be before you'll need to do a raise?
Well, as I said, I think I answered that a little earlier in the sense that we're not raising capital today in the marketplace. But the cash burn is basically, I don't have it off the top of my head. I don't want to get the specific number wrong, but it is absolutely in the earnings number that we put out. And so, what's important is that number is coming down. But when we became a public company, there are a lot of costs in becoming a public company and scaling. So we had to outsource some functions, which we've now hired people internally to not have to outsource to sort of more expensive external roles. So that cash burn has come down. I'm just going to. Yeah, but as I said, I don't want to pinpoint the number here, but it's in the earnings call, and Dave did point out in the last earnings call that it has come down quarter over quarter for the last 2 quarters.
Okay, thank you very much.
But there is still a cost you should know, because we have a whole team that evaluates technologies and launches companies, and in the early stages of the businesses, we support those companies.
Great, thank you very much. I'm sorry. Thanks.
Okay. So let me bring us in for a landing, Roland, if that's okay.
Sure.
So I really am excited about this next evolution in data center technology. As Roland mentioned, the investment is massive, in the hundreds of billions of dollars. And AI technology and associated data centers really do, unlike much of the .com phenomenon that we saw when the bubble burst and the dust settled, they don't help companies save money, or they don't help companies make money. And I think that we're going to find that AI is transformational, not just with the hyperscalers, but with the other CSPs, enterprises, even sovereign nations needing to build out AI infrastructure to be competitive. But what is most exciting to me personally is if I could go back in time and I could have understood, even when I was an operator, providing a key building block to the .com data center build out in the late 90s. You know, Brocade was a powerhouse in terms of connecting servers and storage together, the storage area network. Cisco was a critical and important player in the data communication space. We saw VMware emerge as a company that EMC bought before they went public in terms of the server virtualization space. There were a number of companies in that ecosystem that emerged as the winners that I wish I could have participated in as an investor. And the way that I'm seeing this market unfold, and you know, I do have some experiential grounding to have some informed views. Obviously, NVIDIA has emerged as a major player and an enabler in this space. I wish I'd have bought NVIDIA at $100 3 splits ago, but I didn't. I see EOS Energy emerging and morphing into a key building block in terms of solving the data center energy problem by allowing companies to reduce their energy costs operating costs by as much as 30%. I see Accelsius as a company that is positioned to potentially emerge as a leader in the data center cooling space. So I spent a lot of time looking at next generation CSPs. There are storage companies that no one has heard of today. My daughter happens to work for one that is doing in excess of $1.5 billion in revenue exiting the year, providing back-end inference engine data storage solutions. We're seeing new silicon providers that have not emerged yet. Obviously, we're seeing and aware of, although they haven't gone public yet, companies that provide AI modeling platforms. So I'm really thrilled that Roland was willing to participate in this call, because at least for me, I'm an investor, and I'm an investor in this because I want to participate in a company that I believe is going to emerge as a winner in the data cooling space. So again, I'm not giving investment advice. I'm not suggesting that anybody buy any particular stock. I'm just saying that for me as an individual, I'm very excited about the opportunity to participate in this ecosystem and participate with Accelsius via Innventure. And with that, Roland, I want to thank you for your time. I know you have a very busy schedule, and I want to thank everybody who took the time to listen in and participate. Any parting comments, Roland?
No, just thank you very much for the opportunity. I think what we said earlier, Greg, is spot on. I mean, we've demonstrated our ability to create shareholder value in the first company we created, and we think we're at the tipping point of value creation via Accelsius, and this just underscores what it is that we do. We systematically identify transformative technologies that address major unmet market needs, and our skill set is evaluating the technologies and ramping those companies up to commercial scale.
Well, thank you again, Roland, and hopefully we'll be able to do this again in the next quarter or two, and you can give us an update on Innventure and Accelsius' progress. So thank you, and have a great rest of your day, everybody.
Thank you all.
Okay.
Crush it.
Yeah.
Sorry, I didn't know if that was helpful or if it was more distracting.
Well, your handwriting's so bubbly. So it's like hard to read.